This is AI Command App News. The AI and tech stories moving markets today, what happened, why it matters, and what it means for your bottom line. It's June 18th. We start in space and on the Nasdaq. SpaceX just wrapped one of the most watched IPO debuts in recent memory. According to CNBC, the stock's first week was a parade of superlatives, record trading volume, and the company's first acquisition as a public entity. SpaceX also added longtime Elon Musk ally and former PayPal executive Roelof Botha to its board, a move reported across Yahoo Finance, MarketWatch, and CNBC. The stock is up nearly 50% from its IPO price, and that has analysts at Investors Business Daily openly asking whether SpaceX is becoming a meme stock. For investors, the lesson is familiar. A great company and a great entry price are two different things. When a debut runs this hot this fast, the business fundamentals and the share price can drift far apart, and the gap usually closes the hard way. Next, to the chip wars and to Washington. Intel shares rallied sharply after President Trump said the company will build chips for Apple here in the United States. That's according to MarketWatch, CNBC, and Seeking Alpha. Apple, meanwhile, is reportedly planning price hikes, per Jim Cramer's morning watch list on CNBC. Put those two together and you get the real story of the moment. The cost of moving advanced manufacturing onshore is real, and somebody pays for it. For Intel, a marquee foundry customer like Apple is exactly the validation its turnaround needs. For consumers and businesses buying hardware, onshoring and tariffs increasingly show up on the price tag. Watch the chip equipment names too. Applied Materials, ASML, and Lam Research all hit record highs this week. Now to the story every executive should be watching: AI governance. JPMorgan has blocked staff in Hong Kong from accessing Anthropic's AI tools, according to a report carried across the finance wires. It lands amid a broader controversy over export rules and Anthropic's ties to a Korean telecom giant. Strip away the specifics and here's the signal for business leaders. The biggest institutions in the world are now drawing hard lines around where AI can touch their data and which providers they will allow. Enterprise AI adoption is no longer just a productivity question. It is a compliance, jurisdiction, and data sovereignty question. If a bank the size of JPMorgan is restricting access by region, expect your own legal and security teams to start asking the same questions. That governance anxiety collides with a louder debate about valuations. Yann LeCun, one of the so-called godfathers of AI, publicly blasted Elon Musk's XAI as a failure and warned that AI labs are risking, in his words, a big bubble explosion. That's via CNBC. His comments cast doubt on the sky-high valuations attached to some of the world's biggest AI companies. For investors, this is the tension defining the market right now. Enormous capital is flowing into AI infrastructure and models, while some of the field's most credible voices warn that the math does not add up at current prices. You don't have to pick a side to manage the risk, but you should know which of your holdings are priced for perfection. So where is AI actually delivering revenue today? In the products you already use. Adobe is rolling out AI assistants across its entire Creative Cloud suite: Photoshop, Premiere, Illustrator, and InDesign in a public beta, according to The Verge. Google, meanwhile, is rebuilding the smart speaker around its Gemini model, launching a new $99 Google Home speaker that swaps rigid voice commands for conversational AI. The business takeaway: the monetization phase of AI is here. The winners won't necessarily be the flashiest models. They'll be the companies that quietly embed AI into tools people already pay for. But NEA investor Tiffany Luck made the counterpoint on TechCrunch. Enterprises are still figuring out their AI return on investment. Embedding is easy. Proving the payback is the hard part. For context, this is the kind of unified command surface businesses are moving toward. Every work stream in one place, on infrastructure they own. A quick look at the macro picture. Gas prices have fallen below $4 a gallon as oil supply fears ease following an Iran deal, per CNBC, though prices remain about 30% higher than before this year's flare-up in the Middle East, and markets are recalibrating around the Federal Reserve under Kevin Warsh, with Morgan Stanley cautioning that a Fed more willing to listen to markets may be something those same markets come to regret. Translation: cheaper energy is a tailwind for consumers and margins, but the interest rate picture just got less predictable. That's your AI news for today from AI Command App. The through line across every story: who owns the data, who owns the infrastructure, and who actually captures the value. We'll be back tomorrow. Until then, own your stack.